Hello,
Hello,
everyone.
everyone.
Welcome to
Swim with You.
This is Jim Ludwig from Main Street Financial
Financial
Planning.
Planning.
And today we're excited to have with us Jerry Davis, a CPA and a financial planner from Gresham, Oregon. Jerry has been an accountant and financial planner his whole life. And Jerry, are you there?
I'm here. Thank you, Jim. Thanks for letting me join you.
We're glad to have you, Jerry. And the reason we asked you to come visit with us and our viewers today was we're interested in end-of-year planning, specifically tax planning. So what can our viewers do in the time they have left in 2016 to get ready and maybe save some money on their taxes?
Great question, Jim, and thanks again for letting me join you. In a word, start doing planning. We talk to all our clients about need to do planning, but talk to somebody. Look at your tax return. Find out all the mistakes you did last year that you wish you would have done. You still have a month to do something. As I tell people, I can do a lot for you up to December 31st, but after January 1st, as your CPA doing your return, I'm just a historian. I'll tell you what happened and how much you owe, and there's not a whole lot I can do about it after that. So it's key to look in this month to see what's going on, to see what you can do, and there's all kinds of options available. Some you may or may not want to do, may not be in your best financial interest to do, but if you don't look, you don't know.
Can you give us a couple of examples?
Well, what we have is the common one we deal with a lot of businesses and individuals, and the typical client will call and have a large transaction. They sold a piece of property. They sold a large stock. They had a large gain, and those will always trigger the calls. But back in the old days, that's 10 years ago, we could usually answer that call on the phone and answer the questions, kind of back of the napkin accounting, and get pretty close. Today, the tax code is so complicated. I saw one chart that there's over 30 different tax rates you may or may not be subject to. We just can't do it on the back of the napkin anymore. We need information. We have to run the calculations, and that just takes time. It's not a 5-minute phone call with the CPA. In most cases, that's a great question. We need to do some work and come up with some strategies and opportunities. The biggest change we see happening is we're now doing multiple year tax planning. It's not just one and done. We don't just do it this year and Jim, we'll solve your tax problem for this year, but we may create a big problem for next year. And as your point is very on target today, because we just sent a letter out to all our clients through our newsletter asking them, well, we now know what happened in November. We now know who the president-elect is, and we now know who Congress is. So we're advising all our clients at this point, defer income, increase deductions this year. There's a potential for lower tax rates in the future. Don't know if that'll happen or not, but that's what we want to plan for.
Well, that's a great suggestion, and I hope our viewers will take advantage of that kind of advice. No contact and see if there's any other specific issues they have. Jerry, what is the mistake that you see here that people make end of year plan where they could have saved some money and they just failed to do? Do you have one or two examples?
The common one is they probably just listen to their neighbor and, oh, this was a good idea and it worked for me. It might, it may or may not. As I mentioned earlier, there's over 30 different tax rates. And we've seen clients repeat their same behavior, do what they do. And one of these different tax rates, typically, if we get down into the details, we call it alternative minimum tax or AMT. We're finding more and more clients are subject to that. And all of a sudden, they do this great planning, prepay some state tax, prepay some charitable contributions, all for naught because alternative minimum tax comes up and just takes the benefits away.
In your opinion, Jerry, will AMT go away under the next administration in Congress?
Everybody wants it to go away. The problem is the revenue hit to the federal government is so large, Congress hasn't been able to do it. I would like to see it go away. Every professional I know, every CPA I know wants it to go away. I don't know if Congress will do it or not. It's just too big a revenue amount for them to overcome. At least it has been historically.
Jerry, for higher earning clients, we keep hearing about the topic called the backdoor Roth IRA because they're not supposed to do a normal IRA contribution. Is that something that we should be worried about for your tax plan?
Backdoor IRAs work in very limited conditions, and that's what you have to be careful of. The IRS, in ignoring the issue, has allowed what a backdoor IRA, and Jim, do we all know what a backdoor IRA is? Do we need
a backdoor Roth IRA?
Backdoor Roth IRA. Do we know what that is?
Well, my understanding it is, and correct me if I'm wrong, because you're the expert having on today, is you're not eligible to do a normal IRA contribution, so you make a non-deductible IRA contribution, you convert it to a Roth IRA.
Pretty close. Yeah. The issue with converting any IRA to a Roth IRA is you create taxable income. You have to pay tax on the deferred income that's in your IRA. So if you've never made an IRA contribution in your life before, and you make a non-deductible Roth IRA or non-deductible traditional IRA contribution, and you roll it over to a Roth IRA, there's no tax. The IRS says what happens is your IRA transferred. If you withdrew it the next day, you'd pay no tax because you couldn't deduct it. That's what the backdoor IRA is. The trap is if you've made historical deductible IRA contributions, maybe back when you first started working, you were making IRA contributions and you got to deduct them and you thought that was a great win. Now you've become successful, your income's over those limits, you can't make deductible IRA contributions. They're non-deductible. If you make that transfer, no, you're going to start paying tax. It'd be a regular conversion. The backdoor IRA does not work. It's one of the traps we see happen. Clients go, my advisor told me to do a backdoor IRA because I'm over the limits. And they did it. Oops. You have other IRAs that will trigger tax on that transaction. As I said earlier when we started.
Those into consideration.
Absolutely. Absolutely. So it takes planning. Don't listen to your neighbor. Do your planning, do your homework.
Well, listen, we're just about out of time, but any further suggestions you have for end of tax year planning?
One little trick that I tell clients to do, where if they're self-preparing their return, they're using software similar to TurboTax or other products out there. One little trick you can do, copy last year's file and play with it with this year. The rates are going to be close enough. Things are going to be close enough. Figure out what's going to happen. You can do that. Doesn't cost you anything if you have the software from last year. Just one little extra tidbit.
Jerry, that's really good. We've been talking today with Jerry Davis from Gresham, Oregon, a CPA and a financial planner. Jerry, thank you for joining us, and we really appreciate your ideas and suggestions.
Pleasure, Jim. You take care.
And this has been Jim Ludwig from Main Street Financial Planning, a view of our partner, Jim, and you'll find more details down here in the Bye now.
Bye.